Welcome to ShortView Trading. This is your morning market hit for Thursday, the 2nd of April. What matters today for traders? Well, clearly some risk aversion came back into markets yesterday, with the S&P, Nasdaq and Dow Jones all down 4.4% on the cash session. And with that, signs of stress are also building once again. You can see that with the chart we're showing you now, which shows municipal bond spreads inverted and tracking against the S&P 500. Equally, you can see evidence of that stress returning in the high yield market, as you can see in the chart in front of you now, and indeed in the high grade market as well in the States. Now, whilst those moves are only modest compared to what we've seen over recent weeks, it is evidence of some widening and some stress returning. Interestingly, as we showed you with that muni spreads versus the S&P 500 chart, correlations at times like this are often very close to 1. In other words, all key asset classes move together. That is, it's an environment of either risk on or risk off. It's interesting to look at times like that at our fear and greed models, as in many ways fear and greed is dominating the behavior of all asset classes. As you can see now from the combined RAG 1 RAG 2 chart, our combined risk appetite gauge for 1 to 2 weeks trading, this model has been rolling over from its strong sell signal in recent trading sessions. So we're left with a key question that we articulated yesterday. Are they rolling over or consolidating their gains from the very sharp pickup at the beginning of last week? The evidence is not clear, but what you can see is various indices are starting to test the lows of that range of recent trading sessions, including amongst those are the DAX, the Kospi and the Hang Seng, all of which just dipped below recent lows of the range of those last few trading sessions. Equally, other indices like the Nikkei and the Shanghai Comp are already below those ranges, although more encouragingly the S&P and the Nasdaq remain within their range of the last few trading sessions. So the question remains, rolling over or range bound, or indeed rolling over or consolidating gains? For our full analysis of our 1 to 2 week views on markets, please see today's daily RAG, available to subscribers and on the website. So what are we watching today? Well, similar to yesterday, all those kind of factors. Any more signs of stimulus from policymakers? Watching the financial stress in markets, corporate bond yields, LIBOR, OIS spreads and TED rates, things like that. And also, of course, watching the price action, how we play out within regards to that key question, range bound or rolling over. But over and above that, there's some interesting macro today. There's some relevant macro. Of course, it's weekly jobless claims, where last week we saw that dramatic spike in those claims to over 3 million. And we've also got challenger job cuts for the month of March. So adding further to that picture of how many layoffs are coming through as a result of the lockdown. And we've also got an ISM regional survey from New York for the month of March. So that's it from us. That's your morning market hit for Thursday, the 2nd of April. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter, and or Facebook. Thank you.